Ladies and gentlemen, good day and welcome to the Greenply Industries Limited Q3 FY23 conference call hosted by Asian Markets Securities Limited. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. Actual results may differ from such expectations, projections, etc., whether expressed or implied. Participants are requested to exercise caution while referring to such statements and remarks. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Karan Bhatelia from Asian Markets Securities Limited. Thank you, and over to you.
Hi everyone. On behalf of Asian Market Securities, we thank you for joining us on the Greenply Industries 3Q and 9-month FY23 conference call. In the panel today, we have Mr. Manoj Tulsian, Joint Managing Director and CEO, Sanidhya Mittal, Joint Managing Director, and Nitin Kalani, CFO, along with Gautam Jain, AVP Strategy and IR. May I now invite Manoj sir to begin the proceedings of the call. Thank you, and over to you.
Thank you, Karan. Very warm welcome to everyone, and thank you very much for joining us today to discuss Greenply's operating and financial performance for Q3 FY 2023. Before discussing our performance and outlook, I would like to put forward a clarification that we have categorized plywood business as a sum of standalone numbers and Greenply Sandila numbers, because Greenply Sandila numbers is purely plywood business. For better understanding when we are comparing on a quarter-to-quarter basis or on a YOY basis, and this is after eliminations. And the objective is to provide fair reporting of our combined plywood business under entities. On our performance, we started the quarter on a weak note due to festive season, which is very normal during the third quarter of the year. But post the festive season also, demand pickup was below our expectations. In our plywood business, we have achieved a sales growth of around 8.7% in Q3 FY23 on a YOY basis, supported by volume growth of 2.4% and a realization growth of 6% in Q3 FY23 on a YOY basis. Despite the demand challenges, we were able to maintain our sales contribution from premium category at around 57% as compared to 55% in trailing quarters, which helped us in achieving our best ever realization per unit of rupees 249 per square meter without any price hike in the last quarter. Our plywood business adjusted operating margin was 10.3% in Q3 FY23 and 10% in 9 months FY23, a decline of 72 basis points and 30 basis points respectively on a YOY basis. During the same period, we have achieved realization growth of 6% and 5.3% respectively. So it is evident that despite our command in premium category business and price hikes, the cost escalations were steep and impacted our margins. In the current scenario, chemical prices have stabilized after reaching their peak, while the cost of timber remains elevated to some extent. The net debt at the end of quarter stood at 556 crores. The year-end net debt is likely to be in line with our guidance of around rupees 650 crores, and which is post the major capex on the MDF line, which will be completed by the year end. Going forward, we are assuming no major external challenges. We should be able to meet our increased sales growth guidance of 20% for this full year with similar margin profile in the plywood business. In our Gabon business, as indicated in our previous call, last quarter has been very challenging due to energy crisis in European regions, which contribute significant portion of our business. Recently, our financials has got impacted severely during the last quarter. Recently, there has been some positive traction in order inflow, but it's too early to provide any guidance on this business in the near term. From the perspective, we remain optimistic on the back of resilient demand in the residential sector, consumer shift towards organized segment, and most importantly, our commanding premium category, our value brand, reach and innovation. With this, I would like to hand over to Sanidhya to update on the new projects and manufacturing partners. Over to you, Sanidhya.
Thank you, Manojji, and good afternoon to everyone on the call. Our plywood manufacturing unit at Sandila, with its capacity with the capacity is 13.5 million square meter per annum, has started contributing significantly to our volumes. We have been able to ramp up the utilization of 60% now in Q3 FY23 and are focused to further streamline the machines and labor with an aim to reach 80 to 90% from the next year onwards. Competitive timber cost and product premiumization make Sandila unit a significant contributor in the overall portfolio. In our asset-light model, we have two manufacturing partner units in Bareilly, UP, for manufacturing of plywood and allied products. We are already fully utilizing the capacity of the first project. In the second project, we have started partial production last year and working to streamline the remaining capacity for doors soon. In another such unit at Hapur, UP, with a capacity of 7.5 million square meter per annum, construction activities are progressing well, and we are expecting to start trial runs in this quarter. In our upcoming MDF plant in Vadodara, Gujarat, machinery installation and civil construction work has now been completed. We are expecting to start trial runs in the quarter. Further, most of the sales force for this segment have been recently onboarded, and we are working on the distribution channel and developing a robust marketing strategy to get a good hold in the market. With this perspective, I would like to open the floor for Q&A session. Thank you.
Thank you. We will now begin the question and answer session. Participants who wish to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have the first question on the line of Anand Venugopal from BMSPL Capital. Please go ahead.
Yeah, thanks for the opportunity. So my question is, hello, yeah. So the debt has increased substantially. Is this for the new MDF plant? And secondly, what is the... Yeah,
it's purely for the new MDF plant. And as I said in the opening speech, that for the year end also, we have projected a net debt of around 650 crores. So we have close to around 100 crore addition in the debt also during this quarter. And all of it is towards the MDF plant also.
Okay. And secondly, what is the current size of domestic MDF production in cubic meters? Because how much will it be in 2 years from now, given a number of players are putting up new capacity?
Can you please repeat your question?
Yeah, what is the current size of domestic MDF production meters, and how much will it be in 2 years from now, given a number of players are putting up new capacity?
See, right now it is close to around 2 million CBM annually, and as much as the information which is there with us, this will be anything around 3.2 million in the next 2 to 3 years, because every plant which will come will also take time to ramp up their capacity.
Okay, got it. All good, thanks.
Yeah.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question on the line of Udit Gajiwala from Yes Securities. Please go ahead.
Yeah. Hi, sir. Thank you for the opportunity. Just a couple of questions from my end. Firstly, could you give us an overview of the demand scenario which is currently how is it shaping up for your standalone business?
Your voice is not clear.
Just asking on the demand situation which is panning out in the ongoing quarter.
What is the demand scenario ongoing?
Mr. Gajiwala, I request you to kindly go off the speakerphone because your voice is breaking up in between.
Is this better?
This is better, yes. Please go ahead.
No.
Yeah. So, sir, I'll repeat my question, sir. Can you highlight the demand scenario which is going on currently, say, from January?
Well, quarter four also, January, if you ask me, I would say that could have been much better. Not still as per the expectation. The way quarter four should have picked up, I have still not seen, it really picking up.
And sir, on the subsidiary Gabon front, are you seeing that the orders are picking up, or last quarter we were on nil orders? What is the situation there?
Gabon, please, you have to repeat. Sorry, but your voice is not so clear. So.
Yes, sir, I'll do one thing. I'll come back in the queue with better methods. So.
Okay.
Thank you. We have the next question on the line of Nikhil Agarwal from VT Capital. Please go ahead.
Good evening, sir, and thank you for the opportunity. Sir, I just wanted to understand, since you're putting up the MDF plant in the West, so how is the market out there? Like, in terms of adaptability, are you taking any steps to increase the adaptability of MDF out there, or will it, have you started taking any steps?
So, in the West, since our plant is in the West, our primary focus is going to be the Western India market. So I don't think there's a challenge in terms of acceptability. The competition is already selling enough material today in the West. So I don't think there's an acceptability challenge. There's already a ready market. And we are going to address and capture that ready market very soon. And for sure, the price advantage we'll have in terms of freight, we'll be passing on to the consumer in the Western region, which will help us capture the market much faster than planned.
Okay, and will you be focusing on exports as well, or will it only cater to the domestic market?
I think time will say. We have no export obligation as a company. I believe there are some competition players who had export obligation because of the way they imported machinery. We have no such export liability. So we will be exporting on the need basis whenever we get good prices, or on value-added segment. We will be exporting very little quantity, and whenever we get good prices.
Okay, got it, sir. And sir, just one last question. Will you be, the machines that you've ordered, these are from the German vendor, right?
Yes, absolutely.
Okay, got it, sir. That's it from me. Thank you so much.
Thank you. We have the next question from the line of Achal Lohade from JM Financial. Please go ahead.
Yeah, good evening. Thank you for the opportunity. My first question is with respect to the ply business. If you look at our growth, it's somewhere around 4%, 5% for last few quarters, while the competitor is showing a bit higher than ours. So, can you elaborate a bit in terms of the premium segment growth, non-premium, for us and for the industry?
See, industry, we can't say much. In terms of this year also, on volume, we have a growth of around 15%, and value for the full year, we are saying we'll be growing at around 15% on volume and around 20% in terms of value. Okay. And yes, see, if you look at our company, we have a very different business model. We are a premium player, and today the volumes are actually there at the economy level. So we are also strategizing that how do we need to improve further in terms of our volume in the premium segment itself. Okay.
Okay, so you're saying basically you are still focused on the premium segment, and that is kind of reflected in slightly lower volume growth. Have I got it right?
Yes.
And any particular reason why we are slightly, non-aggressive for the economy segment? Is it to do with the distribution, margin, pricing, competition? Anything you want to highlight, sir?
Well, look, traditionally, if you see, Greenply has always been a premium player. Okay, and there was a time when almost 70% of our business used to come from the premium segment, and almost 30% from economy. I'm just talking of, let's say, last year and maybe the year before and earlier also. And that equation to some extent has already changed. So it is not that we are not growing in the economy segment. The most of the volume growth actually is coming in the economy segment, which will continue to grow. Otherwise, we would not have even got a 15% volume growth. But if you look at the focus, for sure, we believe that we are the only one in the country who is serious about the brand in the premium segment, and we will continue to work on that also. We don't want our premium segment not to grow. At the same time, the focus on economy segment is also there. Otherwise, the volumes will not be even to the extent what we have picked up.
Got it. And with, how do you see the growth in FY24-25? You think you will be able to deliver a double-digit growth, or that's a bit of a challenge as we speak?
Are you saying 2 years?
Yeah, FY24 and 25 in terms of volume growth for the plywood business, sir.
See, today, I mean, if we really look at, I feel that a 10% volume growth is something which we have started looking at for every year, and volume growth. So basis the same, actually value growth will totally depend on how the raw material prices are also going up, down, or it's stable. Because last 2 years there has been changes in the raw material prices. But as far as volume growth is concerned, internally we are very clear that minimum 10% growth we'll have to try and achieve in the years to come, at least next 2 to 3 years.
Understood. And how about margins?
Well, margins right now are in the range of 10%. We will work towards improving the same. But at the same time, our investments also will go up, because if we have to get a 10% volume growth in this business, somewhere our investment on the business will also go up. So marginally, the benefit of the operating leverage may actually get adjusted with my additional expenses. But for sure, double-digit margin is 100% we are looking at.
And this is X of ESOP charge, you mean basically, right?
This is?
Excluding the ESOP charge. Can you give us the ESOP quantum for FY24-25? Roughly, how much would that be?
24-25 or 23-24?
FY23, 24-25, if you could, sir.
23-24 right now, basis whatever grants has been issued, it is only to the extent of around 6 crores, which will be in quarter 1 and 2, and nothing beyond that at this point of time. Total 3? Only 3. Sorry, only 3 crores in the next year and nothing beyond that.
FY24, 3 crores and nothing beyond that, right, sir? Have I got that?
Yeah, as per the grants, whatever has been issued. So any fresh grants which will get issued will add that cost.
Got it. Sir, if I may ask on the MDF business, how has been the progress? You mentioned about the trial runs are beginning this quarter, but if you could also highlight, is there any cost overrun we have seen, and B, what kind of utilization are we looking at for FY24 as a full year?
So, this in terms of cost overrun, we had mentioned maybe around a year back itself that our initial cost was around 555 odd crores, and we mentioned that we are able to see a 6 to 7% increase in the cost. We are almost on target, and possibly we would be anywhere around 600 crores, maybe 595, maybe 600 crores. But having said that, there were some changes, additional scope change also, which we did during this journey. So it's not purely a cost increase or cost escalation, but a few new things also which we did during this period. So it is including everything. What was the second question?
In terms of the utilization for FY24 and 25, and what kind of margins one would look given the current prices where we are?
In terms of capacity utilization, we are targeting that we would be able to start the commercial production from the month of May, mid-May, okay? Because since we are taking the trial production in the month of March, normally after that there is a shutdown which has to be taken, and which lasts for anything between 30 days to 45 days to correct all the snaggage, and then the full commercial production will start. I mean, full means, of course, it will be a ramp up. We are assuming, given these timelines, that we should be able to do somewhere around 300 crores of sales in the coming year. At 300 crores, margin is something which we'll have to see, because initially you will have a ramp up, you will have a few sizes, and we may not be able to produce the premium products from day one, so everything will become a part of the ramp up plan. We are at best trying to cash break even on a 300 crore sales in the coming year.
Got it. Thank you. I have more questions, but I'll come back in the queue now again. Thank you.
Sure.
Thank you. We have the next question line of Shrenik Jain from LIC Asset Managers. Please go ahead.
Hi, thanks for the opportunity. So my question is relating to our MDF segment. So as we are seeing that the influx of imports have increased significantly, and as our plant is near the ports, so what will be our MDF pricing strategy? Will we have to sell close to the imports price? And previously at peak utilizations, we were assuming a EBITDA margin of 20%. So is there any change in the assumptions for the margins, assuming whatever the pricing we plan to sell at?
So our pricing level is going to be very much in line with the competition. In certain markets, especially Western India, where we will have the advantage of being locally present without disturbing our margins, we will definitely pass on the benefit of freight to the local market in the West, so that we are able to capture the maximum market share in that area. And I think 20% should not be challenging. Once we are utilizing capacity properly, maybe the year 2 and year 3, we can easily look at this number or something better at today's realization for sure.
Year 1 may not be 20% or, may not be equivalent to 20 or plus, because initially we will ramp up. And as we said that, we'll not be start to produce all premium category from day one. So those may start after 3 or 4 months. And that also there will be a ramp up in the same also. So first year margin can be anything around maybe on 300 crores, 14-15% itself. But from next year, definitely, as Sanjay said, basis the other players also, whatever is their EBITDA margin, we should be maybe minus 4 or 5% compared to that. And the subsequent year, possibly we will all be at a similar level.
What is the current pricing difference between imports and domestic brand in West?
Sorry, come again?
What is the pricing difference between the domestic brand and the imports in Western India?
See, it's we don't have these numbers to that extent, because we are still waiting for our production to come. But I can only hint on this is there are already other players who are there in the market. We have not seen any significant dip in their margins also during this period. What they have done, they have not even corrected their prices. It's just that they have given some schemes in between. And if it remains so, then I think on a 80-90% utilization, our margin also will be much better than 20%.
Okay.
And imports, as we have said also that imports only happen in the plain category. And we will start focusing, as our line is fully prepared, we'll start focusing on the premium category also from day one.
Okay. And can you throw some light on the OEM market? I believe 60-70% of the OEM market is in South India. How much of the OEM market for MDF is in West India? And also, can you explain us about the sales team strength for MDF? How much hiring you all have done for sales team?
See, sales team hiring, I will not share exact numbers on that, but now we are fully geared up. Our batch is joining, in fact, it has joined today, and which is now started undergoing a training also, induction training and everything. So we are now fully geared up in terms of our sales team for phase 1. For phase 2, maybe we will again start looking at ramping up the team after 6 months or 7 months. And again, the second question on OEM. See, on OEM, the way we have looked at, and when we conceived this project also in West, there are OEMs who were struggling to get their material on time from some of the suppliers in North or South. that clearly gave us an opportunity, and we had done all our due diligence at that point of time, that if we have a local plant in West, they will 100% prefer us compared to others. Second, we also found that, it is like a chicken and egg story. So since there is no producer there, the OEMs also didn't wanted to set up their shop there. Though they were convenient doing it in West of India, but they didn't want it to because of the logistics challenges. So as we have put our plant, we will also see influx of more OEM now coming and setting up their shop in West.
Got it. Thank you so much.
Yeah, thank you.
Thank you. We have the next question line of Arun Baid from ICICI Securities. Please go ahead.
Yeah, hi, sir. The question was more on the MDF front. Sir, could you just explain, like in this MDF plant, we were focusing on what thin MDF, thick MDF, and more so on the wood cost? Because we have heard players in North India have seen a wood cost pressure. So is the case in South India. So how is the wood pricing in western part of the market?
Yeah. So I'll first answer the wood cost. So our wood cost definitely, in the current scenario, the wood cost continues to rise across India, or it's on the higher side. But now we are in a situation where we've already started building a stock for wood, because right after we start producing, we are going to see monsoons very soon. So we had to start planning our wood in advance. So our cost of procurement of wood is absolutely at par with anybody who's producing in North India. Yeah. But definitely not as low as South, but our cost is definitely at par with North India or slightly lower than North India.
Broadly, what would be the range, Sanit, if you can just help us with that?
Anything between 5,400 rupees to 5,500 rupees, somewhere between that will be the average purchase of wood delivered to our plant.
Okay. And on the thick and thin MDF part, can we make both in this plant, or how is it?
So this particular plant is designed in a fashion, since it is our first line, that we can give any thickness from 1.5 mm right up to 35 mm. So we have the entire thickness range, and also when it comes to the sizes, we can almost give every size which is selling in the Indian market, whether it's 8 by 4, 8 by 6, 7/4, 7/3, I don't know. Any size you think of, we can give. 10 by 4, 12 by 4, all the sizes.
Very good. And Sanit, on the front that, there was a South player who has taken a price cut, 5-6%. What's your view, because we are going to be in production ASAP, what's your view? You think the industry will have to take price cuts based on whatever you see on the pricing front, or that's not going to be there? What's your view as a friend?
I think the view is very clear. In the past also, this industry has been slightly cyclic. There is a lack of capacity in the country. The prices really go up, and the manufacturers really enjoy a very good margin. Then again, there's a lot of capacity which comes in. There's a lot of fight. The margins come down, and then again. But what we've seen, in the period when Greenply was one entity, at the lowest time, we've seen 18%, 19% EBITDA margins. So, all our paybacks, everything is designed on that. And even if you see today, with the increased wood cost, with our location in West, when we make our calculations, we are much more than comfortable. So, the cash flow is designed very conservatively. We are ahead of that, even today with all the increased costs. So, I'm not worried.
And Arun, I think the industry numbers are already there, from the other players also. Whatever numbers I have seen, we have not seen any significant dip in terms of their margins. And our own understanding of the market also is that, none of them have actually cut down the prices. They have come out with some schemes, and possibly they are able to manage at this point of time.
Manoj, you are right, but they have seen significant dip in margins. Significant dip. If you look at QOQ, the margins have come up by a huge number. Anywhere between 300 to 500.
Look, if we compare it with the 35-36%, then that was unreal.
No. I'm not comparing 36%. Century revised its margin guidance to 20-25%, and they are full utilization. So, I'm not comparing with the 30 number at all. So QOQ, they have come down dramatically. If I do that number of that 34, which was in Q1, then it will be a big fall. This quarter, if my memory is right, the margins of Century was down to 20-23% from the peak of 30-35 which you mentioned just 2 quarters away. So, and that too on full utilization, because they obviously have the benefit of that advantage which they had. But ballpark, what I'm trying to get to is that in your view, there would not be any big price cuts in the industry on the domestic side. Is that, I'm just trying to get that point.
No, if you ask me, I have always been advocating that, margins above 25% in a business like MDF is unreal.
No, Manojji, that margin number is relevant. I've said that number of times because that is based on CBM. So margins on, just to give a perspective, the margins of both Green Panel and Century has come down without taking any price cuts. So that is not the point. You should look at EBITDA per CBM. That is the way you have to model this business. It will not work. The percentage will not work here. तो अगर आपने प्राइस 10% काटा तो इसका मतलब ये नहीं कि आपका मार्जिन 25% का 15% ही होगा, right? So there will be a lot of difference there. But anyway, so the point which I was trying to drive is you don't think there's going to be price cuts, or is there a material price cut we can expect from the industry?
I mean, with more and more production coming in, there might be a price cut. We have made our cash flows and our planning on the worst. Okay. So, we are very confident that we are better than that. It will not be lower than the 18-20% on which we planned our cash flow.
So just one thing, you mentioned 300 crore sales, in FY24. So this is at what utilization?
What utilization?
Yes. So 300 crore के लिए some CBM number you have ballpark taken, right? So.
No, are you asking for the full year? See, that amounts to around 40-45% utilization. Okay. But if you will see quarter 4, then possibly in quarter 4 will be somewhere around 65 to 70% utilization.
No, fair enough. So basically we are penciling at about 1 lakh CBM sales, right? 2 lakh 40.
Yes. Around that number, yes.
So we are building at 30,000 realization. 30,000 rupees per CBM realization we are building in, right? So in that case, because 1 lakh CBM
will be slightly more than 1 lakh CBM only. I am saying ballpark, you are almost right.
Because the issue set, correct me if I'm wrong, is that our focus will be more initially, obviously by default, towards the plain MDF market, where the realizations are sub. It depends industrial grade, but sub 25,000 rupees. And to achieve that 300 crores, you have to have a significant mix of your pre-lam MDF. Just try to figure that out, because then the mix has to be pretty biased to get that 30,000 rupees per CBM or ballpark closer to that number.
Oh, first of all, Arun, the realization what we are taking is not 30,000. Okay, for the full year. You are right, it will not work out to that number. Okay. Our realization somewhere the overall this CBM would be more than 1 lakh. I'm saying more or less you are right. Yeah. I think our working was coming to around maybe 1 lakh 15, 1 lakh 18,000 CBM or something. Okay, so it's around 18 to 20% more than the number what you're talking.
Okay, fair enough.
And yes, in the your plain and this, the realization will be lower. It will be even maybe you guys are better aware of, but it should be in the range of 23,000-24,000 rupees. Right?
No, it's lower, sir. Lower. Industry is much lower than that number.
Okay. So they have the number, the team has the number. So, I don't remember all the numbers exactly, because we are still learning about this.
Yeah, and also, one of the reasons why you see the competition's margin lower is because they have a lot of export liability. As a company, we will have zero export liability.
No, true. Well, I was comparing with Century, not with Green Panel. That region, initial, they had a lot of export. Great. And so just one clarification. On that 300 crore, ballpark you said we'll make 14-15% margins. So that's about 45 crore. Hello.
Yes, I don't see most of these numbers right now are assumptions. Okay, everything depends on how we start the plant and this. Sure. I think, in 1 or 2 quarters we'll be in a better position to discuss the nitty-gritty of these numbers to that extent.
So just help us with one more number here is what would be the depreciation for this plant? Because that number we'll have, right? In this plant. Sorry? What would be the depreciation for this plant? On that 600 crore capex, what would be the depreciation for the full year?
Depreciation for the full year.
How much you have taken?
About 36, 37 crores.
36 to 37 crores.
Okay. And sir, what would be the interest cost for this plant analyzed would be total on that 600 crores, total number? Both including your fund.
About, again, around 36, 37 crores.
So do you believe this? Okay. So when you think, 70 odd crores is our cost below EBITDA, right? Yeah.
Can we move to the next question?
Sure, sir. We have the next question from the line of Udit Gajiawala from Yes Securities. Please go ahead. Mr. Gajiawala, can you hear us?
Yeah, am I audible?
Yes, you are.
Yeah, just wanted to check on the MDF front. So what will be the cost advantage that we might have in West? Because we believe that the timber cost will be higher for Greenply in West. So are we seeing any, savings in terms of chemical prices? Or, when we say we'll be par with the peers, because they are in more proximity to the RM availability?
No, raw material cost, as we said, is almost similar to the raw material cost in North, our procurement cost. In terms of chemical cost, we will get advantage being in West and being in Gujarat. Okay, in terms of power cost also, since we have put a solar energy system there, a hybrid energy mechanism, we will be much better off in terms of our power cost also. And of course, the near proximity to our end buyers will equalize the logistics cost as it will be for others also. So it will be like very similar, except the benefit what we'll get on the chemical cost and also on the power cost.
Understood, sir. And so largely, sir, from if we look at peak utilization, so what kind of geographic concentration are we looking at? Would West be around 40-45% of our business or more than?
Well, yes, for sure.
Okay, sir. And so lastly, on the overall current demand scenario, if you can highlight for the plywood business, like what kind of next year is looking like for 24. You mentioned like a 10% volume growth. So is it par with the industry growth, or we will be outperformed?
Well, as I've always said that understanding the industry growth is very, very difficult. So we are working on our own strategy, and for next year also, we just started the budgeting process and everything. But our internal guidelines is that we must look at 10% volume growth on a year-over-year basis.
Okay, sir. Thank you. Next question, sir.
Yeah.
We have participants who wish to ask a question may press star and one on your touchtone telephone. Participants who wish to ask a question may press star and one on your touchtone telephone. We have the next question from the line of Ashish Kumar from Infinity Alternatives. Please go ahead.
Thank you, sir, for the opportunity. Sir, in terms of apply margins, though we have got a very large share of premium, but compared to our competition, we still seem to be having a lower margin. Do we see that margin going up to at least 12-13%, or we will be stuck at this 10-10.5%?
See, I don't know when you say competition, but today we are having just one business line, and all our costs, everything gets apportioned. All our fixed costs get apportioned over one single business line. So as we have now MDF also going forward, there will be some operating leverage which will come as company as a whole. That is one. And second, I think, as I said, that we are also investing a lot back into the business. So, the margins for sure will improve going forward, but I am not able to tell you at this point of time that whether, yes, it will for sure improve by 2% next year.
Right. And sir, in terms of the debt that we have taken for MDF, when does the repayment start in terms of cash flows?
Repayment starts in in the following year, basically, the financial year 25.
Financial year 24-25. 24-25. And how much is the repayment in the first year, sir?
First year it will be, so every year it will be around 47 to 50 crores in that range.
Okay. And what will be our average cost of debt for the MDF?
Average cost of debt for term loan will be around 7% plus, basically.
Fully hedged?
No, not hedged. So we'll have a natural hedge, actually, so on the foreign component.
How much will be the foreign component be?
Foreign component is around 25%.
25%?
Okay, term loan.
of the term loan. And so we will, do we have EPCG requirements as well?
No. We have no EPCG. We have not imported the plant under the EPCG.
Yeah. We have not imported.
So we have no export liability.
So we will, but basically for the foreign, to the extent of the foreign currency risk, that we will have to export something. Sorry.
Yes. Yes. Certainly we want to, and also, there is, if you see the industry cyclic, right? In India it does very well, then it does not do well. So a certain quantity we want to export.
Okay.
To kind of have an alternative market available for us.
And we would plan to export what, 25% of our production?
No such plans at this point of time. We have the intent to be also into the export market. So when people look at that as a disadvantage of being near the port, that there is also an advantage.
Natural hedge will operate at Concall level, not at Bahut.
Yeah. So the intent is always there, but it will all depend on the domestic market scenario, export relations, whatever relations we can get, demand situations, all those factors.
Right. No, because even the people in South are exporting a reasonable percentage, given the weak demand in Indian market. So I thought maybe one would like to export in the first year to get the capacity utilization higher. And say in terms of supply of timber in western region, you don't see that as a constraint.
We don't see that as a challenge. I mean, setting up an MDF plant, the first criteria is to make sure that the timber is available. And we are very confident of the research we've done before setting up, choosing the location, and also are very confident on the current ongoing plantation activities and initiatives taken between the company and the farmers.
And where do you think that initially where we will be getting our timber supply from? So which region? What will be the lead for the initial supply? Where do you think how much will be the lead distance?
Sorry, come again?
How much will be the lead distance for procurement of timber for us, sir? Initially?
So obviously the target of the company is maximum 100 to 150 kilometer radius. But practically speaking, today we are doing from a radius of anything between 250 to 300 kilometers.
All right. Okay. And you are reasonably confident that we will have our MDF up and running in May?
Absolutely.
Well, yes, it looks like. And just to add to that, on the timber thing, we have also worked extensively on the plantation side of it. While we speak, we have more than 10,000 acres of coverage in plantation. Of course, we don't get the crop in year one, right? But that's a process which we have started there in a big way.
No, absolutely. So that will take
financial year.
Sorry?
That will take its own time. That's what I was saying, the initial part.
Of course, that will take its own time.
But in MDF, it's a typically 3-year cycle.
3 to 4 years. So we started this process around 13 to 14 months back. The moment we started this idea of conceiving the plan there, we started working parallelly on the same also. So we are creating something for the future also to de-risk any type of worry and help us further.
Right. Okay. And wish you all the best, sir. Thank you.
Thank you.
Thank you.
Thank you. We have the next question on the line of Jojo Shaju from Alpha Invesco. Please go ahead.
Okay, thank you, sir. I have a few questions regarding the plywood business. So, first question is that in the recent years, we are seeing a lot of products being launched as a substitute of plywood. For example, this Reliance Industries introduced this product called railwood, which is made out of fiber and polymers, and they are not using the wood there. But on the application side, it can be used wherever the plywood is being used. So I just want to understand a big player like the Reliance coming into this industry, do you think it will be disrupting the market?
See, 2-3 things on this. One, the railwood is already in existence for last 4-5 years. Okay. And second, it's not a very carpenter contractor friendly product because it has it's a composite product which also has plastic in it. Okay. Mostly this product is good to be used for cladding surfaces or like, maybe some flooring surfaces where you have too much of water or exposed surfaces. And the last thing is in terms of comparison with wood prices or the plywood prices, this is significantly high. So because of all these reasons, it has not really picked up into the market. And it's a different product also in terms of usage.
Okay. So it's not directly competing with a plywood product, you are saying?
No, it cannot.
Because what I understand, this can be used in furniture, ceiling side. So most of the plywood, wherever we can use, it can be used there also. And right now, I believe they are going to scale up the business, and if they have the scalability, the prices will also come down in the future, right? So,
well, as I said that it is not a direct substitute for plywood. Yes, there are certain applications where one can always look at, using this, but then they will have to pay a price also for the same. So it's almost like 1.6 to 2 times as expensive as plywood.
And I don't think a company like Reliance will wait for scale to come. I mean, if they have the price, they will first give the price at the product at a much cheaper cost, get the scale, and then increase the price. We know what they did in the telecom sector. So if they had that pricing advantage or anything of that sort in their mind, by now they would have done it and finished it.
Okay, sir. Understood. And sir, second on the sales volume for the plywood, here, correct me if I'm wrong. Also, for the last 3-4 years, the plywood sales volume was almost flat. I mean, in 2019, you sold 57 MSM, and in 2020, you sold 56, and 2022, 57.5. So, I mean, what is the reason for that? And if you are guiding for 15% volume growth, what gives you the confidence for that? Or what all factors will be leading for this 15% volume growth?
See, your voice was not totally clear, but what I understand, your concern, what you're raising is, in the last 2-3 years, the volumes have not grown, right? This is what you're saying?
Yes, sir. Yes, sir.
Yeah. This year, the volumes have grown by 15%, correct? And next year, we are talking of a 10%, a desired volume growth of 10%. One of the reason also is that there were many product lines where we had supply challenges. So in this year, we have been able to mitigate many of those challenges with our fresh plant coming into existence, our capacity ramp up, which has happened in Bareilly, the new line in Hapur, which will also become operational in Q1. So from the product side, at least we'll not run into any challenges or from a supply constraints. We were actually big time bogged down because of not having the supply for the products where there was demand in the market for our product itself.
Okay, understood. Okay. And so my last question is on the timber price outlook. So you have already mentioned the prices will continue to rise for some period of time. So my question is related, how will be impacting the unorganized players? So can they sustain at this timber prices levels going forward, or do you think there will be a lot of unorganized players will be exiting this business because of the timber price? Anything like that?
Again, your voice is not clear. This question is with respect to MDF, right?
Mr. Sarju, request you kindly repeat your question a bit slowly.
Sure, sir. So my question is related to the timber price outlook. So you have mentioned the prices will be going up at least some period of time. So my question is regarding whether the unorganized players in the plywood segment can sustain at this timber prices level. Do you think they will be exiting this business because of the higher timber prices?
So, see, timber prices are already at a high level. Okay, we have not said that it will continue to rise. There are no market intelligence which is saying it will continue to rise, and there are very mixed opinion on the same. Whatever is the price at that today, the market is being sustained even by the unorganized players. But in the long run, personally, we have a view that the way the rules and regulations in this country are changing, and the consumer preference, which is also moving towards branded goods player, and you will see more and more branded goods player. All the label players have also started spending money on the branding. It's very good for the branded goods business. So the regulations, like when I'm saying regulations, I am clearly talking about the GST regulation as it continues to improve in the country. And second, the consumer preference, which is now slowly moving more towards branded goods. These are two good signs for any branded player for future.
Okay, sir. Okay. And that was useful. That's all from my side. Thank you.
Thank you.
Thank you. Participants who wish to ask a question may press star and one on your touchtone telephone. Participants who wish to ask a question may press star and one on your touchtone telephone. We have the next question on the line of Karan. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, on the 600 crores of capex at Vadodara, any benefit or any subsidy from Gujarat government with respect to green building or water or power, etc., and anything to highlight?
Yes, there are some subsidies. I think there are HSS subsidies. There are subsidies on capex. Yeah. There are some employee-related benefits basically, and some taxation benefits.
Also, we have electricity duty exemption for first 5 years.
Okay. Right. So also, sir, with Europe looking slightly weak, and also last year we had sent our first consignment from Gabon to US. So any plans to de-risk the Europe exposure to US, and your thoughts on this?
No, the US thing actually, we are still working on the same, but it is not something which, one, it took a lot of time for them to get the material at that point of time, so that feasibility was not coming. In terms of, they were also not happy that if it takes so much of time for the material to reach to them. And second, Europe has started again picking up. So I think if Europe comes back to semblance, then there won't be a problem. During this period, we have tried for other countries also. We have tried even for CIS, for Africa also. Somehow nothing major has materialized. So our dependence on Europe for that business is high. Other than Europe, of course, we do in India and we also do in Southeast Asia. But Europe is the most stable business, or it was the most stable business for us.
Correct. And two big bookkeeping questions on capex for this year and next year, and ESOP for this year and next year. Thank you.
Capex for this year and next year?
Yes.
Capex, how much of capex?
FY23 should be, as I mentioned earlier in the last call, around 620-630 crore basically this year. And next year it will be around 25-30 crore on a consolidated basis.
Right. And on ESOP this year?
This is capitalized on a capitalized basis.
ESOP this year, for the full year, it should be close to around 12 crore? This year? 16. So this year ESOP is 16, and basis the grants which is issued for next year, it is only
2.8.
3 crores.
3 crores.
Okay.
Yeah.
Thank you. That's my command.
Thank you. That was the last question. I would now like to hand it over to Mr. Sandhya Mittal for concluding remarks.
Thank you all for taking time to participate in this call. In case of any further clarifications or query, please feel free to reach to Mr. Gautam Jain. Thanks again and goodbye.
Thank you. On behalf of Asian Markets Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.